Hello, everybody. So, what a rough day for growth investors today, especially some of the channel's favorite growth plunges today. That was the tension. Job openings came out a little better, and then you had the overhang of the bill, the big beautiful bill as it's called, and the overhang of the Elon POTUS fight, and so that wasn't a very good day for growth. That was a very good day for old world stuff today. If you look at the small caps, they were up nicely. Small growth had a field day. It was great for old world, but new world not so much. Let's talk about what's going on. Let's talk about MSTR. So MSTR was way down, and I had someone that kind of annoyed me in the comment section saying, "Oh, this video not looking so hot now," like maybe about my video yesterday, and the answer is zoom out. That's the answer. Go back 2 years ago when I was covering this stock in the $20 to $30 range. Go back a year ago when I was saying I was buying it at 100 pre-split, right? So go back and assess, right? Zoom out. That's the way to do it. You zoom out when you assess a stock like MicroStrategy. Frankly, down 7%. I mean, it's not that bad. We were very, very nicely up yesterday. And I think this is, and again, I'm not a trader. I'm a long-term investor. But hanging out in the markets for well over a decade now, I kind of know what's going on. It's probably a matter of selling the news. Everybody was anticipating the S&P qualification, S&P, and of course they still have to get past the committee. I don't think that's going to be a thing. I think they're going to have to get past the committee many times. Many eligibility windows are going to have to go through. That's my take. Of course, it doesn't get you many clicks to have that take. But the point is, the news is getting all excited. Apparently, they're going to report something like $14 billion. And so they're on a lot of mainstream newspapers. There's this news all over the internet. They're going to report $14 billion. Of course, market participants positioned before that. Now that the news is here, you just sell and you take a profit. That's what I think happened. I hope he ATM'd yesterday, but I think the drop today was mostly sell the news about the S&P inclusion rumor/news, but rumors of qualification, which is now going to be a thing. We have to wait in a few weeks until they report, but they will report because they have to adopt the new accounting standard. So they will report, maybe 11 billion, maybe 14 billion. I see different numbers. Doesn't matter for the longer investor, but for the short-term trader, that mattered today. That means the trade was over, the trade was done. They sold the trade. That's why the stock sold off. The stock sold off much more than Bitcoin. Bitcoin was only down, from yesterday, only down 1.6%, 1.5%. I know it may seem like a big swing to go from 107 to 105.5, but in reality, it's a little more than 1%. It's a swing that's becoming in line with the Nasdaq. It's a swing that is often less than the Nasdaq. Bitcoin has had long periods of time where it moves less fast than the Nasdaq. Can you believe that, right? This asset is really maturing. So not worried at all about MSTR. If it drops further, I'll be looking to add. My level is 360. If it drops to 360 or below 360, I will likely add more to this position. That's my level. That's my level for MicroStrategy. Okay, moving on to Tesla. So Tesla is the stock that can't catch a break. And my viewers know that I don't cover Tesla very much on the channel because it gets too toxic in the comment section whenever you cover Tesla. It's just add. So I don't cover Tesla, but I own Tesla. It's a big position for me. I own it. I just don't cover it anymore. But it's a difficult stock to own. To be honest, like of course I'm not selling on this. I saw two mainstream influencers, some of them are like 30,000 followers on YouTube, who said they were selling Tesla following this. I'm not making emotional decisions like this. Even if I were to decide to sell Tesla, I would sell a little bit and I would sell out across many, many months. I would not sell out right away everything, hoping to buy back later at 260 or 250. How many times did people do that on HIMS, hoping they get back in later? So of course not. But annoyed am I? Yes, I am annoyed. I mean, he said he was done. Was it 3 weeks ago? He had said he was done when the stock dropped 17%. You remember that? He had said he was done, and I guess he's not done. So President of the United States and Elon are fighting again. Elon is an idealist. He thinks the dollar can be saved. And of course, my channel is called Beat the Denominator. So you know what I think? I think the dollar is at a point of no return. The libertarian movement, it's very honorable, but it's at a point of no return, and I think the solution is Bitcoin. And in fact, the more pragmatic people in government, some of the more aggressive backers of Bitcoin Reserve, they believe that if we move to a new monetary system where the US is positioned early and owns a bunch of Bitcoin early, well, that could be just enough to pay off the debt, and we'd be good. And so and of course that was Saylor's conclusion, looking at the Fed, looking at the level of debt in the system in 2020. Saylor's conclusion was to buy Bitcoin. In the early days, Elon's conclusion was also to buy Bitcoin, and then he ended up selling more than half of it on a whim. I mean, it still has a lot of Bitcoin. I just think that Tesla has something like 35 or 36 billion of cash, probably more now on the balance sheet. The solution is very simple for Musk. I would say buy Bitcoin. That would be the solution. The debt, I want to point out another thing about the debt of the US, and of course it's very scary, increasing it by $5 trillion, but let's not forget that the US also owns a lot of land. Trillions, dozens of trillions of dollars worth of land, which is owned by the federal government. You could also have a plan where the federal government just sells the land. Probably not a good idea either. Probably better to just keep issuing debt and keep the land, because land will probably go back up in value, just like the Bitcoin. But Elon Musk is an idealist, and that's why I think he's picking this fight, because he's an idealist. He thinks the dollar can be saved. He's a very virtuous person on that front. I would say follow Peter Thiel. Peter Thiel said it's not worth it. Peter Thiel said politics is not worth it. Maybe Elon Musk, you should follow Peter Thiel. Peter Thiel is, of course, your friend, Elon Musk. You work together at PayPal. Peter Thiel is the head of the PayPal mafia. Everything we know about how to do business in the 21st century was birthed by Peter Thiel, and you too, Elon. So I think it's time to move on. I think it's time to buy Bitcoin. The problem is Tesla, unfortunately, is a stock that trades on headlines. Today we had a negative headline. It was front news on CNBC for like 3 or 4 hours. I was updating the front page. I don't know why I keep using CNBC, but anyways, habits have a hard time dying off. So that was the headline today, the fight. And tomorrow the headline is going to be the negative headlines on the numbers, on the delivery numbers. And of course, everybody expects the numbers to be bad. Even if the numbers come out not as bad as we expect, you bet the media is going to make it negative and turn it negative. So no matter what number is released tomorrow, they're gonna make it look negative. They're gonna use the comp that makes it look the worst, and that's gonna be the headline tomorrow. So tomorrow we have headline risk. Today we had headline risk, but frankly, that headline risk is too much. We didn't need that headline risk. We did not need that headline risk. People who don't have a fully built position are rejoicing. Unfortunately for me, I have a fully built position. I'm good on Tesla. I don't need more. Few stocks are more headline driven than Tesla. And I will conclude with this. And if you follow the channel for a long time, you know my view on leadership. My view on leadership is that there's been tons of very, very bad leaders. And very bad leaders, it's easy for a very bad leader to throw off an average company and to kill an average company. It's much harder for a bad leader to kill a wonderful company. And I'm not saying Elon is a bad leader. I'm just saying whatever happens with the leadership at Tesla, I think the foundation of Tesla is there for them to win their market and for them to win real-world AI. The foundation is there, just like the foundation was there for Microsoft when Steve Ballmer watched the videos online, watch the videos of him and ask yourself, is it a good leader? Is it a bad leader? Watch the things about the fax machine and all that sort of stuff, and ask yourself, did he kill the company? Of course he did not. It's the most expensive company in the world, depending on the day, depending on how Nvidia is doing. And so I think even if someone entirely disagrees with Elon Musk's leadership, I force myself to assess companies only on the potential. The problem is short term. This is a headline-driven stock. Careful with options. That's all I'm going to say. Stock number 3 is HIMS. What did HIMS do? What did HIMS do? I really, really wonder right now. And of course, it ended up the day better because the market realized, okay, well, we don't really know why HIMS was beaten down so much. But it was down 7% at the open. HIMS was down 7% at the open for no reason, no headline, no nothing. So we may be entering another punching bag phase. I called the last phase, I called it the punching bag phase. I even made with AI this beautiful little punching bag named branded HIMS, and we have Mr. Market just punching HIMS for no reason whatsoever. We may entering another phase like that, and it's very annoying because if you look at the odds, follow HIMS House, by the way. I cannot recommend HIMS House more than I already recommended. Look, I started looking at this video. Unfortunately, I don't have enough time. I haven't watched the entire thing, but it looks, the excerpts I've seen, it looks very unlikely that there would be a suit against HIMS for semaglutide. And if there was, they would likely settle, but it would be a very risky thing. And so, of course, it makes the headlines, right? Lawsuit risks makes the headlines. It's fearful. People are fearful. They click. But if you dig under the hood and if you spend an hour on that single issue, like HIMS House does, kudos to HIMS House, you can see that if you had that concern, you sleep a little better at night. So if anything, that was good information coming out. But the stock is still getting bounced around for apparently no reason. What's the takeaway? The takeaway for a stock like MicroStrategy, for a stock like Tesla, for a stock like HIMS, the takeaway is Saylor's takeaway. Volatility is vitality. HIMS, MSTR, Tesla. The market deeply cares about these stocks. The market sees something into these stocks. It sees disruption. These stocks disrupt conventional thinking. People disagree on these stocks, and as a result of that, they are being bid up. They're being bet on. The options market is deep. Remember, HIMS was able to raise more than 800 million in debt at next to no interest. Not too long ago, it went international. It did all of this because of the volatility of the stock and because of the interest that this stock triggers. This is not a boring stock, and these stocks are getting bid up. The market is noticing this stock. These stocks are spinning. They're spinning faster. They're like black holes that are spinning fast, attracting capital. And sure enough, HIMS is, out of all of the positions that I have, I often sleep on this and think HIMS is the position that I'm the most confident on. Like out of all of them, and I'm very confident in MicroStrategy, of course, and Bitcoin. But HIMS is just at the heart of the disruption of traditional healthcare, the heart of the disruption of traditional healthcare. This vertically integrated company that does doctor visits, that does pharmacy, that manufactures the generic drugs, that does the marketing, that does the branding, that manages to avoid doing insurance because they manage to be cheaper than insurance. It just screams 0 to 1. It just screams 0 to 1, 0 to 1, and the numbers don't lie, and the growth accelerating. The past 3 quarters, growth at HIMS has accelerated. It was growing at 50%, and now it's growing in the 60-70% range, partially thanks to GLP-1, but not only. So I'm so bullish on this stock. Anyways, that's why I cover it all the time on this channel. Stock number 4, I finally, and of course, Nebius has been stressing me out because I've been thinking I don't have enough Nebius over and over. I don't have enough Nebius. I've been thinking about it. I know this chatter picking up online, everybody talking about Nebius online. I'm like, okay. And it's not enjoyable because my cost basis on Nebius is something like 25 or 26 right now. So if I'm buying Nebius right now, I'm paying double. I'm paying double. I was paying more than double if I had added just a few days ago. But thank goodness we lost all of the gains from the past 5 days. So we're back at 50. So I acted today on Nebius and I bought leaps on Nebius today. And of course, the details are on my Patreon, as you know. So I acted. I'm happy about that, and laying out the capital in 2027. Hopefully, they have nice options for such an early stock. They have nice options going on at Nebius. And I thought that was a better way to access that one. And here's the thing about Nebius. The valuation is not that bad considering how hot the sector is. We have to consider how hot this sector is. The leader of Nebius is the founder of Yandex. Yandex is the Google of Russia, right? They have an astute management team. They have a big tech level management team. That's a big deal in my view. Now, it's an even bigger deal. And of course, like I said, management is a secondary thing I pay attention to. But where it's an even bigger deal is the investments, the strategic investments that they've made and that they brought. And that coupled with the revenue growth makes me very confident on this one. So the investments are ClickHouse. So ClickHouse is a database solution. It's very popular among tech. The reported valuation apparently would be $6 billion. They own 28% of that, but I've seen valuations online go much higher than that for ClickHouse, and maybe not at these levels, but for a long time, when it was trading in the $30 range, I could have argued that the entire stake in ClickHouse, give it a couple years, and that's going to be the whole value of Nebius. It's kind of the way I would have argued it. And then there's another thing. They have AV Ride. So I would say AV Ride is a top 10 autonomous company, right? And I have a big position in Tesla, so I gotta edge my bet. What if Tesla's self-driving solution is not winning? Well, if it's not winning, I have Google. Google is a stock I own, right? They have Waymo, and now Nebius, you get a self-driving solution for free when you buy Nebius and Nvidia. So it's kind of edging the bet. So I like that they have AV Ride, even though I don't think they're going to be the winner. I like that they have it. That's a nice hedge, and that's not reflected in the stock price. That is not reflected in the stock price. But of course, I wouldn't be touching this stock if it were not for the guidance. The guidance is outstanding. They are guiding for a full year 25. Let's take the midpoint, 600 million. They're getting 600 million revenue for 25. Trailing 12-month revenue at Q1 was 161 million. So give it 3 quarters and they're going to be at 600 million, maybe 700. If no luck, 500. But I think AI has shown us that being bullish has been rewarding AI investors. AI, we've had a tendency to be too bearish. They're going to be adjusted EBITDA positive. They're almost there. So I'm very bullish on this one. The growth rate I find absolutely outstanding, and the fact that the growth rate is not just a guessed number, that growth rate is based on the revenue that they guided on Q1, gives me a lot of confidence, and that's how you get to a rule of 40 through the roof at 300 plus rule of 40. Of course, that doesn't mean much when rule of 40 is so high because it's all based on the growth rate. But I'm quite amazed by this company. I'm glad I bought Leaps today. I hope it drops more. If it drops more, I'll buy more. But yeah, today was not a very good day for growth stocks, and that's okay. It's understandable. It's the first day of June, and we had a great Monday, and so today we sold off. But as you can see, I am steadfast in my approach to investing, and I am not worried at all. So this was not investment advice, not financial advice. This is only entertainment. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.